A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a significant move on Thursday morning, House lawmakers passed a proposal to amend the federal deduction for state and local taxes, commonly known as SALT. This change is part of President Donald Trump's broader tax reform package, which was initially enacted through the Tax Cuts and Jobs Act (TCJA) of 2017. Currently, the SALT deduction is capped at $10,000, a limit that has been a focal point for lawmakers from high-tax states such as New York, New Jersey, and California. The proposed amendment aims to raise this cap to $40,000, up from the previously suggested $30,000, with a phase-out for incomes exceeding $500,000. As detailed in the revised language released by the House Rules Committee. If approved, this provision would take effect in 2025. Furthermore, the SALT cap and income phase-out would see an annual increase of 1% from 2026 through 2033. However, the proposal also includes a reduction in itemized deductions for certain taxpayers in the highest income tax bracket, which could diminish the benefits of the increased SALT cap. For the year 2025, the 37% tax rate applies to individuals with a taxable income exceeding $626,350 and married couples filing jointly with earnings above $751,600. Despite the House's endorsement of the SALT deduction changes, the proposal may face hurdles in the Senate. Historically, prior to the TCJA, the SALT deduction had no cap, though the alternative minimum tax limited benefits for some high earners. Taxpayers must choose between the standard deduction and itemized deductions, which include the SALT deduction capped at $10,000, medical expenses, and charitable contributions. The TCJA doubled the standard deduction starting in 2018, which is adjusted for inflation each year. For 2025, it is projected to be $15,000 for single filers and $30,000 for married couples filing jointly. Currently, approximately 90% of taxpayers utilize the standard deduction, meaning they do not benefit from itemized deductions. According to Garrett Watson, Director of Policy Analysis at the Tax Foundation, changes to lift the SALT cap would predominantly benefit higher earners. He notes that with an income phase-out starting at $400,000, only the top 20% of taxpayers would see substantial advantages from the proposed changes. However, members of the SALT caucus argue that the deduction limit is a critical issue for middle-class families in their districts. Representative Josh Gottheimer, a New Jersey Democrat and co-chair of the SALT caucus, stated that fully repealing the $10,000 SALT deduction limit would represent a significant tax cut for middle-class families nationwide. In addition to the SALT deduction changes, House Republicans advanced another aspect of Trump's tax bill, which includes an expansion of the child tax credit. If enacted, the bill would make permanent the maximum $2,000 credit established by the TCJA, which is set to revert to $1,000 after 2025 without congressional action. The proposed changes would increase the maximum child tax credit to $2,500 per eligible child from 2025 to 2028, after which it would revert to $2,000 and be indexed for inflation. However, some policy experts have raised concerns that the proposed increase would not benefit the lowest-earning families. Critics argue that the changes could exclude millions of children from receiving the credit. Specifically, the House proposal stipulates that both parents must have a Social Security number when filing jointly to claim the tax break for an eligible child. This could potentially strip the child tax credit from 4.5 million children who are U.S. citizens or lawfully present. For 2025, the child tax credit is expected to be worth up to $2,000 per qualifying child under age 17 with a valid Social Security number, with a maximum refundable amount of $1,700. The credit phases out once adjusted gross income exceeds $400,000 for married couples filing jointly or $200,000 for other taxpayers. While it is anticipated that most families will benefit from the child tax credit, middle-income families are expected to gain the most. A bipartisan bill aimed at expanding access to the child tax credit was passed in the House earlier this year, but failed in the Senate. Despite previous support for lower-earner expansions, the current House plan appears to prioritize benefits for middle and high-income families, as noted by Elaine Mock, a senior fellow at the Urban Brookings Tax Policy Center. As the tax reform discussions continue, both the SALT deduction changes and the child tax credit expansion remain key points of contention in the ongoing legislative process. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.